If you have an investment property and it's replaceable, sell it. So you're selling it at near height value. Keep the money in cash. I never mentioned this before. This is never advice I would give anybody. It's always like buy and hold. But if you have the money in cash, you're going to be buying more real estate when the downturn ends, and you're going to be buying better real estate. So why not sell it now and then replace it later with something better? Hey guys, Steve Zalunardo here with Remax West Zalunardo Associates. Welcome to our monthly videos. This video topic is going to be on just the month in review on real estate and what we saw, current events and what we see for the future now. We'll talk a little bit of what happened the end of May into the middle of June here. So obviously we know interest rates have raised, and it's obviously caused more impact on buying power for buyers. Obviously the news media, all the negative information coming out, is pretty much shut down the market in total. We have listings we can't sell. We keep adjusting pricing. Some of our listings now, we're converting them into leases and sales, so whatever happens first that my clients are going to take. In my neighborhood here and other areas that we're working on, we're seeing like massive price drops, and it's just a race to the bottom, as I've always been talking about. Particularly in my area, we've seen houses drop $400,000 since the initiation price, and now they've finally terminated off the market, so they're not real sellers anymore. They're going to sit and wait, obviously, because the prices are not there anymore. But this is not just happening here in Nobleton and more, like, let's say, affluent areas. It's happening in every area. We have a listed in Angus, same idea, where we keep adjusting prices, and then we have a race against other competition in the area where they keep adjusting and lower and lower and lower. Where obviously, if our clients are don't need to sell and are rather just keep it and rent it out, this is what we're doing for them. And this is it. This is obviously the turn that's happening. We know that the inflation rate just came out yesterday. They were talking about it. So in the States, it's 8.9%, and in Canada, we're at 6.8%. So Canada's highest in the last 30 years, and in America, it's the highest since the last 40 years. And the only tool basically the Federal Reserve has, and also the Bank of Canada has, to kind of flatten inflation is raising interest rates, and this is what they're doing now. Look at mortgage rates even in the States. When I bought my investment property there in Feb, our rate was like 3.6%, and it was a 30-year mortgage. So for 30 years, you paid 3.6%, which is fantastic. Now it's probably about 6%. So we had to lock into some sort of different strategy where it's like for 7 years, it's locked at 4.5%, and then it opens up at whatever the current rate is at that point, and it's a 30-year span too. But the only good thing is about the States too is we can terminate the mortgage without any penalties. It's nominal, like a few grand, let's call it. Regarding Canada, like we'll see what happens here. I think we're obviously in the deep abyss. We're seeing the stock market crash yesterday. The NASDAQ dropped 10% just based on the inflation rate. I've been calling for this since February, to be honest, so it's nothing new to me. But the thing yesterday that opened my eyes is usually every year we meet for a mastermind meeting, me and a buddy of mine, another colleague, Hussein, and we're just, we forecast what we want to see in 2020. We'll put our business plans together, and we kind of, we mastermind this 2 to 3 days strictly on business and business development for the new year. End of 21, going into 22, it wasn't even at the crazy point, but it was nuts. And our main topic was, naturally, this can't continue at this pace. What's going to cause it to end? What's going to cause this market to end? And we kind of looked it up and down. We kind of say, well, we still have a shortage of inventory and a massive amount of immigrants coming in. So it's going to cause more pressure on the properties available for sale, which is still going to bring the prices up. So this is, that's how the picture looked. And I kind of just stumbled upon it and mentioned this. It's like the only thing that's going to take down the market is inflation, because no one's paying attention to it, and it's chipping away at the block. It's basically carbon monoxide in the room. It's killing you slowly, but you don't even know it's there. And this is what we're seeing now, is where affordability. I posted something on Instagram yesterday regarding just the cost of how everything has gone up in the last year or two. And if you're on a fixed income, like I represent the general public, I have hardworking families that I work for. I know they're on fixed incomes, and when their food bills go up 20-30%, fuel costs are up 30-40%, and then your car insurance and everything's up 20-30-40% since the year prior, you may not notice it, but it's going to be it's a domino effect. It's a compounding effect where you don't notice it this month, but within 12 months, you're going to be in deep shit. So this is what's currently happening now. I think people are starting to realize the inflation the last 2 years, and obviously it's mentioned more in the media because of the size of it rather than say last year. But yeah, and this is what's currently going to flatten out the market, because look, the inflation's come up. People can't afford property or can't afford to, you know, to live as they would. And what is the Federal Reserve and also our Bank of Canada? The only way to curb inflation is to raise interest rates. Raise interest rates. Obviously, affordability changes in housing. People don't want to buy housing because they see the prices down, so they're sitting on the fence. You got real sellers that need to sell a house because they're, you know, they bought another property or they're in financial, you know, restraints, and they got to flip the house, and they keep going lower and lower in prices. And this is where we're currently at now. So we don't know. We don't know how deep this is going to go. You know, as I've been mentioning, what I've done, I've unloaded, you know, like $7 million worth of property in the let's say last 60 days now, and we have a few more to go. Now we're going to still hold the ones that are necessary to hold, because what I was saying is if you have an investment property and it's replaceable, sell it. So you're selling it at near height value. Keep the money in cash. I never mentioned this before. This is never advice I would give anybody. It's always like buy and hold. But if you have the money in cash, you're going to be buying more real estate when the downturn ends, and you're going to be buying better real estate. So why not sell it now and then replace it later with something better? It's an upgrade, right? Or if it's a non-replaceable rental property, say it's like a duplex, triplex property in a nice area where it's unreplaceable, or a property it's got more to it, like you can subdivide the lots or build a bit larger structure on it to create more units, then naturally you're going to want to keep those properties because I'm sure you bought them cheap a few years back. So yeah, that's pretty much the advice only going forward. And I think right now, like, you should be saving a lot of money, saving as much money as possible, because it is what it is. The writing's on the wall. Like, there's really no light at the end of this tunnel. Like, we know once the inflation is at this point, they're going to keep raising interest rates. They're going to flatten the whole market. There's going to be a very dark period where you know, nothing sells. Everyone's kind of just stagnant, and then naturally, probably to a re-election, then they'll start lowering the interest rates, and then ultimately fuel back the markup up, and everybody's happy again. But we got 3 years of this government currently, and so it's going to be pretty different to what we're used to the last, let's say, 10, 15 years. That's it, guys. If you have any questions regarding these videos, please DM me personally or write a comment. We definitely would like to get back to you with that. But please, if you like these videos, please like, share, and subscribe, and we'll get you on the next one.